What is Forex? Have you ever exchanged currencies at a bank? That's Forex. It's the act of trading one currency for another. There's no central exchange, and today most trades are placed online. The FX market is also open 24/5, meaning you can trade around the clock. Of course, it's not just everyday people that trade Forex. In fact, some of the biggest traders include world governments and central banks. Most online currency trading is done in the spot market. With Spot FX, you can trade on both rising and falling markets. You're also trading on price movements without owning the actual currency. And with no brokerage fees to pay, you know the exact cost of your trade up front. But how do you trade Forex? Currencies are traded in pairs. You always buy one and sell another. The first currency is known as the base. The second is the quote. Let's use US dollar, Japanese yen as an example. The base currency is dollars and the quote is yen. Imagine the pair's exchange rate is 106.705. This means that $1 equals 106.705 yen. If you think the dollar is going to grow in value against the yen, you buy US dollar, Japanese yen. If you think the opposite is true, you sell US dollar, Japanese yen. Every currency pair has a buy and a sell price, known as the bid and the ask. The ask, which is what you'll pay when buying a pair, is always higher than the bid. The difference between the two is the spread, which is the cost to trade that pair. Although Forex can be profitable, it also involves certain risks. Always ensure you have a good risk management strategy in place before trading. To learn more about Forex, visit trading.com.